evening. The Indian markets ended in the negative terrain for the third straight trading session today. After opening in the red, the NSE Nifty slipped below the 5,000 mark on the back of sell-off in other Asian markets. The sentiment received another jolt after the European stock market started off with a negative bias. The key Indian stock indices staged a smart recovery in the mid-afternoon trade, aided by a pullback in the European indices. However, the recovery proved to be short-lived as the benchmarks witnessed a vertical fall with just half an hour to go before recouping some of the losses. The BSE Sensex has recovered more than 200 points from the day's low, while the NSE Nifty recovered nearly 70 points. The capital goods stocks were among the top losers. The index lost 4%, followed by BSE Power Index, which lost 2%, and BSE Oil and Gas Index lost 1.2%. Even the BSE Mid Cap lost 1%, and the BSE Small Cap Index lost 1.3%. On the other hand, the BSE Consumer Durable Index and the BSE FMCG Index lost 0.5% each. Sustained weakness in the Indian rupee versus the US dollar also partly underpinned the weak sentiment on the local bourses today. However, the rupee did recover in line with the pullback in the euro and stocks. With the Q2 corporate results season over, the sentiment in the Indian markets will be driven largely by external events and domestic macroeconomic developments. The near-term outlook remains cautious due to heightened volatility. Fresh buying could be initiated once the Nifty claims 5,120. The broad trading range for Nifty continues to be 5,000 to 5,400 from the short-term perspective. Domestically, the Indian economy is on a slippery slope owing to aggressive monetary tightening, sticky inflation policy paralysis, and a worldwide slowdown. Ballooning deficit and sliding currency have only added to the gloom. Globally, surging bond yields in Italy and Spain have added to worries about the fiscal health of the Eurozone and its implication for the global economy. Asian stock markets finished mostly down today, weighted down by constant concerns about possible spread of the Eurozone credit crisis to the core of the region. Meanwhile, Bank of Japan left its benchmark interest rates unchanged while scaling down its economic outlook, citing a global slowdown and a stronger yen. Thank you. Wish you have a great evening ahead.